Good morning, everyone. This is Daily Trading Analysis with a quick market update for today, 31st of August, the last day of the month. I'm doing this video earlier because later today we have the FOMC interest rate decision and the press conference, and I'm not going to cover that today because that's quite late for me from Europe. So I'm going to cover that tomorrow, but I would like to share with you some things that may help you a lot during today's session. If you are trading, and also for the short term, because I'm seeing something really interesting in terms of volume and positioning on the Nasdaq. First, we are going to review the economic data. Today we got NBA 30-year mortgage rate still 6.82, not enough for the applications to continue higher, so we got minus 3.9. I think unless we cross 6.5, because there was a time in which we also were at 6.8. We were at 7, we came lower, 6.93, and then we jumped again to 7. Now we are coming down to 6.87, and I think 6.70, that's the low of the year for 2024, and 6.3, 6.5, that would be insane for all these people that are really waiting for rates to buy a house and take a mortgage. So that's with that information. With the ADP employment, look at this, 122,000, way lower than the estimate. And that's a sign for the Fed and for everyone that the labor market is cooling down. This supports the idea that the interest rate cuts are going to come pretty soon. I don't think today, but I do think in September the Fed is going to lower the interest rates. In that regard, we can see that in the probabilities, we can see how everyone is waiting for that September rate cut. 87% probability. I think 12% are thinking 50 basis points cut. I think that's too much. But look at this 60 and this 58 before ending the year. We are pricing 3 interest rate cuts. And I think this is going to freak the market, because remember that the Fed, it's not going to cut interest rates because they want. It's going to cut interest rates because they think they need to support a little bit the economy. What sector, what part of the economy, it may differ in terms of maybe it's the labor market, the housing sector, the banking sector. I don't think it's the banking, but I think the labor market and prices need to cool down, and businesses, small caps, need to start getting cheaper loans. That's why we are going to cut interest rates in September. But if we cut too aggressively, that is going to do the opposite. It's going to freak out everyone's. If we cut 50%, like these ones are trying to estimate, 50 basis points, if we cut 0.5% instead of 0.25, that's going to freak out, because why are they doing that? Is the economy doing bad? Doing so bad that we need more support? That's going to freak the markets. So that's the idea. Don't forget about why the Fed is going to do what it's going to do. So apart from that, we got employment data, wages 0.9, still quite high, benefits 1%, quite interesting, and finally Chicago PMI 45 as expected. So before moving into the technical analysis, let me go through real quick how are in terms of earnings. Yesterday, AMD and Microsoft shares dropped, but we are recovering into the open and after the open, because Microsoft, I was quite surprised. Look at this, EPS 295 instead of 293 beat, and revenue 64.73, 64.39. That's a bit also. But they are starting to blame the low growth instead of the AI and the cloud sector are growing less than expected. But these numbers are quite strong, quite resilient. We are talking about Microsoft, one of the AI leads in the ecosystem. So I think the shares dropping, let me just, shares 1.78, yesterday was 4%. I don't think this is fair for them. So I think Microsoft investors are going to buy the dip. These numbers are pretty good. But what is even more good is that they are telling employees that they are increasing the bonus. They are going to award 25% of annual bonus to all those employees that make higher performance. So they have cash to motivate, to invest into their employees. So that's pretty good. Samsung also reported earnings, AI strong demand, and basically it was an increase in shares like 8% or things like that. Samsung is pretty good. We have to see these earnings from all these companies, same as Apple, Samsung also on AI. Boeing, wider than expected losses. I told you with American Airlines, the airlines are feeling the pressure of lower spending and lower demand for their flights. But the big key for today to understand it's AMD. AMD earnings were beautiful. Data center sales more than double in a year, and it has sold over 1 billion of its MI300 chips, 115 year-over-year surge. So earnings per share 69 versus 68, and revenue 584 versus 572. It expects more sales, more than expected, income more than expected, and AMD shares were 6% year to date because everyone was going to Nvidia. Everyone was crazy with Nvidia, and they are still, because look at up here. Nvidia today is soaring 10%, 11% last time I checked, because it's not only about AMD. Nvidia didn't release any earnings. It was AMD. But due to the over concentration and due to Nvidia is the lead on the AI chip manufacturing, this is going to affect the semiconductor sector overall. So we are seeing that these earnings, this huge change in sentiment in AMD and in Nvidia, and also ASML shares popped 7% after report that the US will exempt allies from the new China chip restrictions. There will be some companies in some countries that will avoid the US tax for China exports. And this is huge for all those, in this case, Dutch firm ASML, all those European stocks companies that are exporting to China chips made from US that are going for AI in China. So they are excluded. So the entire sector of semiconductor production it's in a boom today, in a boom. So let's jump into the charts and let me just explain you first before moving into anything else. As I told you, the semiconductors are 5.88 SMH. It's just skyrocketing. It's quite choppy, but AMD selling off after a huge move. Nvidia, it's also pushing higher, 10%. It's still trying to hold, and this is what is holding the market because the banks are quite mixed. And actually, let me just tell you, the Nasdaq is grinding higher, but it's 2.72%. Look at this open. Look at this overnight. So let me just go back a bit and explain you, apart from the boom in semiconductors, let me just show you how I interpret this. This on your right is the volume profile in this range. In this range, we got this range that was established By the way, down here, this was the infamous 10% pullback. So be aware of that, because I told you on my weekly recap on Saturday, and I also told you yesterday, and I'm telling you today again, there are people like 10%, 5%, 15% pullbacks are going to buy long term. And we have to follow those because those are big investors. We are day traders. We have pretty low amounts of money in comparison with them. So we need to wait for those people to take positions and go with them. Go with the price action that go with that trail of money that they are leaving behind to jump and ride that wave. That's the best way of trading, day trading futures, because we are small fishes. And this 10% down here, what's key? If we take that and we frame the area market structure, if we frame this area and we put a volume profile from this day at this hour until today, right now, this is the volume profile that we got. Look at the point of control right here. We have the point of control at 19,200. Yesterday, we lost it. But look at what happened. Look at this. This is called fail auction. When you go out of the range and you quickly come in again, you also know this as the manipulation move in higher time frames. When I saw this, I was super bullish. I was super bullish today. And I took a trade based on that and based on the move that yesterday happened at this level. So we basically have this structure here with the point of control here. And we went out of the range and we quickly came in again. We are squeezing all these people and we are breaking out the higher part of the range. This is a beautiful move of a beautiful side of manipulation move. And if we go to lower time frames, the 30-minute chart, the 15-minute chart, we can clearly see how the accumulation before the breakout happened. It all happened yesterday. Bad earnings, everyone, well, bad. Decent earnings, everyone was digesting the news, and then big money started piling in. Look at this overnight. This is just algo buying, and we are grinding higher. And let me tell you, we are continuing to see this until the end of the day. That's my forecast. Because this kind of accumulation at mid-range, now let's go to the actual contract. That was my trade. This accumulation here, this was the same exact manipulation move. Move lower, lower high, high, lower low, higher low. This was the break of structure that happened yesterday in the middle of earnings and in the middle of the change of the day. We left behind this 15-minute, and remember the 10% pullback from all-time highs is still there at 80.85. And since then, let's go to the 1 minute. Since then, we've been just crashing, buying. This is garbage price action, but it's higher and higher and higher. And when we approach the open, everything started to accelerate in a way that, because the shorts, yesterday's shorts were just being squeezed yesterday. All the people that went short into the earnings were short into the bottom of the barrel and are now down here thinking, what were you thinking? If you were short down here, what were you thinking? That would be insane. You would be like 600 points in the red. So basically today is a squeeze that we can also see the big squeeze in the, this is a bullish engulfing candle from a bounce from a 10% pullback from all-time highs. That being said, we have to always take into account where the volume is. And that's why I have all these pairs in here. So now that I covered the lower time frame volume that I wanted you to be aware of that, let me change. So I can remove that. I can remove the range. I can remove this. Let's go to the other contract and see how the volume, by the way, look at this trend line that we are now trying to break, and all these highs that were basically removed, those are liquidity, and we are above that. Now, pay attention to where I think we are going to see the biggest battle of the day. We are now pulling back on the 30-minute. After 1, 2, 3, 4, 5, 6 green candles in a row, we are now pulling back. Don't get me wrong. This is just a pullback. I think we are going straight into 650. Why? Because this is, if we put the volume, if you have seen my videos, you know what I'm going to say about this. We have a big volume node here. The point of control of the range is now this. And we have the actual point of control of the entire range since all-time highs up here at 19,960. And in the middle, there is nothing. The same way we went like a knife through butter down here the other day, and we established a range in here, this zone from this pivot, and also the inverse fair value gap that we left behind on the daily, this is what I'm talking about. The daily has an inverse fair value gap being right now open and being injected right now. So we have the middle zone coupled with a pivot from that day. That's the range. This is the range in red, which I think in between 19,630 and 660, between 630 and 650, something like that. That is going to be huge. And if you were long since from down here, that would be an insane move, because that would make, like, from settlement, that would be like 3.75%. And don't have any doubt, the Nasdaq is able to do 3.75% in one day. You've seen that in the past, in these days, these past days, to the downside. 600 points the other day, the worst day since 2022. And all these shorts that are fueling this market, this move today, are going to get even more squeezed, because semiconductors are on the way up, and we have different catalysts and earnings. And I mean, be really careful, because I told you, I warned you about this during the weekly recap on Saturday, and I reminded you yesterday. This zone down here was beautiful for big money. So they are just buying and buying and buying, and their target is all-time highs and below. We are far from that, but for now, the first sign of extreme bullishness could be continue grinding until here and hold here some kind of structure and close the day above 600. That would be insane, because then the next stop would be the range point of control up here at 20,000. And Apple earnings are coming, and big earnings are coming. And that's specifically the type of catalyst that these guys are waiting for. They got a beautiful entry down here. and they are betting on good earnings for Apple, and on Friday more earnings. I mean, they are in a sweet position, and that's what they wanted. So don't be smart and think twice about what is happening right now, because I think the big money players are basically buying long term, pushing these markets and squeezing all the guys that were saying, oh, we are going to hell, earnings are going to be bad. They were last week, but Microsoft, AMD, and the entire semiconductor sector are quite bullish. So be careful who you bet against, because Apple in this setup is going to rip your face if you are shorting this market. That's my thought. And we are continuing higher. As you can see, there are still some people trying to short this market. The 45 EMA was broken, but I still think this is not natural price action. This looks like algo buying, and this is going to continue buying until who knows when. The technical pattern for me today is just, by the way, my long was down here. Look at this beautiful, look at this. This was long. The long was breaking out on this candle, breaking out this range. Actually, I think it was 130 something. The stop was this pivot down here. So I was risking like 20 or 30 points. And the target was exactly this. This was the high of the range, this. So let me just do a quick long. So it was there. The low was this pivot. That was the high. 200 points. I already knew that was almost $5,000, but this was beautiful, beautiful. And I was not expecting this since overnight. I was waiting for a retracement and then buy again the 10%. But this squeeze is just natural selection. Don't short bottoms. Don't short the Nasdaq when you are coming into earnings, because this can happen. Microsoft, AMD, and maybe Apple. If Apple beats earnings, we are going to see a huge move in the Nasdaq. 20,000 plus. I mean, I swear to God. And that's all. For my side, I wanted to do this longer video and focusing on what I'm seeing, not the market still open. This is just 1 hour and a half since the open. I need to do some other things, but please review carefully what I've said. And I will be covering tomorrow the FOMC. I will review every information, and tomorrow I will try to be concise and try to summarize everything. But today, everything is aligning. Guys, don't short this market right now. Don't short. I think there's a lot of money put it in here, and it's going to be more and more because of the catalyst, because of the earnings, and let's see what happens. Thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Let me say it again. Don't short this market, please. Don't short this market. Buy a decent pullback and let it run. This setup, it's beautiful. We have a Wyckoff manipulation at lows, and this is pretty strong setup for the long, for the long side. So be smart and be patient, be disciplined, manage your risk, because that's going to be key for your career and success in this trading. Stay safe, everyone, and see you tomorrow.